G'day folks, welcome back to Pete's Investing. It's March 15, 2024. This is the iron ore technical analysis. We do have a bearish trend that's still continuing, so keep riding that wave if you're taking shorts. We're also going to cover briefly the tops and bottom indicator introduced and go through a trading idea for you. So stay tuned to the end of the video. So what I've got here is the weekly, daily and hourly charts, and what we look at is the trend, and for that we look at the ADX 25 at the bottom here. That's still showing a pretty strong bearish trend on the daily likewise, and on the hourly as well. Secondary, we look at the CSI 150, and if it's broken above or below this moving average band, and currently it's well below that, pretty steep fall on the weekly. On the daily it had a bit of a touch in that band at that point there, but then it fell lower. And on the hourly we did have a bullish divergence versus that point there. The price rose ever so slightly, and then it fell off. Now that was probably a failed divergence in that point. Let me just draw a Fibonacci retracement. So had we taken it, see, from that point, it may have just penetrated through that point there, the 23 to 38%. That's always the closest range we choose as the target area. So let me just mark that in that area there. Now, you'll notice as well on the hourly, let me just blow this up. We've still got a bearish divergence, a bullish divergence in play. That point there is still higher than the entry, which is back there. So that can still be considered a divergence versus where we are today, up until that point. Even if you took it to that point, that low there, it's still a bullish divergence. So in other words, we may see a bounce from here at any time. So just be careful about going going short, because we could start bouncing at any time. Now, in terms of a trading idea, before I go there, let me just have a look at the Fibonacci's on the weekly. I like to look at previous lows. So let's start with this one. To that point, you can see it's fallen well below the 61% level, and that's always a key area to look out for. And if I pull it down to that point there, that's also broken through the 61% level, so that's very bearish at the moment. So, and let's just bring it one more level to see how to that point. And you can see there it's approaching the 61%. So we may have a bit more of a fall to at least this 61% level of that bigger range, but we'll see how it goes in the coming days and weeks. On the hourly, there you go, there's that same range. It's fallen below that point there. So let's go and look at the a trading idea. And also, just as an FYI, I do have these arrows on the chart which help indicate potential tops and bottoms. Sometimes they work, and I like to use them in conjunction with divergence. You can see there's a few red arrows up there, and it finally fell off at this point. There's possibly a bullish divergence there, and then it picked those little bottoms and tops. Now notice it's still giving you all bullish candles, or bullish arrows I should say, especially in line with this bullish divergence on the hourly. So we may see a bounce to the upside any time. That, by the way, that indicator is all in the description below should you wish to watch that video and learn how to trade it. In terms of trading idea, again, making sure the weekly and a daily are aligned. So this is the daily chart, and you can see there the CCI is broken below the moving average bands, and likewise, as you saw, the weekly is also below, in which case we can take short trades only, avoid long trades. So what I've done back here on the average down approach, I've added a back test which takes us back to this point where it broke below the moving average band, and with the exception of that little poke its head above into the band there, I've tested back the whole period back there. So you could have theoretically stopped taking trades there, or you should have stopped taking short trades there and not taking any long or short trades, and start taking short trades again at that point when it broke below the band again. So this is the average down approach. This is the stop loss approach. And again, stay tuned to the end of the video to watch the rules on that. But basically the average down approach generated $62 and the stop loss approach generated $11. Of course, that depends on the size of the contract you're trading, and this is on the hour time frames on both of these. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.